Hello, this is Brian Shannon from AlphaTrends.net. Today is Friday, the 18th of January, 2007, and the market's closed. And what an ugly week it was for the buyers here. The market fell from about 141 and change down to about 132. So big losses for the S&P 500 this week as support was taken out at about that 143 level a couple weeks ago. And it's just been underwater since then. And you can see it's trying to stabilize maybe here near these highs from back in April of 2006 and along this trend line. But it was down again today, and still zero signs of any buying pressure in here at all. We were looking for potential support near that 133 level, but when you're looking at weekly trend lines and that sort of thing, it's an inexact science, and it's not a good idea to buy at a trend line anyways. It's just an area to take your analysis to shorter term time frames and look for evidence that maybe the buyers are regaining control. That's the idea of looking at the bigger time frame, to look for those potential areas where the supply and demand might start to find that battle and the buyers start to regain a little bit of control. But again, on all time frames, there is zero evidence of that battle anywhere as close to being won by the buyers here. You can see on the 30-minute time frame, we've got a steeply declining 5-day moving average here once again, and that's going to need to at least flatten out and market get back above that before we can think that this market can have any attempted rally that could hold for a little while. The bigger resistance levels for next week are going to be near 138. 143 is a big level as well. But there's all kinds of resistance along the way up here, and any rallies that we get in a downtrend, again, should be traded aggressively and treated with suspicion because they'll typically fail. This market is deeply oversold and in need of some kind of relief rally, but the buyers just aren't showing up. So I'll give you the same advice I did yesterday, which is just to be very patient and wait for the evidence to materialize before you make any purchases. It's easy to look at it and say, hey, well, they're down too much, or the PE or whatever you're used to looking at as far as a valuation basis. But the point is, as long as there's still sellers in the market, they are not down too much, and we still don't see that big capitulative volume that would be nice to see that kind of signals the end of the move, like we saw right back in the August lows right here. We saw that big volume move. We need a big volume day, kind of a flush out, maybe something where it gaps down, sells off, and then closes higher with huge volume, something on the order of up in this area. So still zero signs. We've got a holiday shortened week next week. The market's not open on Monday because of Martin Luther King Day. So maybe the government's going to get some kind of rescue package together. Who knows? 133 is the very short-term level of resistance for this market. That's where it had a problem in here today, and that's where the daily VWAP is as well. And again, that's within the context of a much bigger downward movement. So no reason to be looking at the long side. The semiconductors were actually up for the week. This group gained 1.27% on the week, but it's hardly. There's nothing bullish about this market in here. It just continues lower, finding some support near that 350 level, but again, not a reason to buy. The 30-minute time frame, you could start to say, well, we've got a higher low in here. Now if it can make a higher high, maybe we'll get a little bit of a relief rally, and I think it would have to get above 365 for that to materialize. But you could start making the case that potentially there is this little inverted head and shoulders pattern. We've seen those inverted head and shoulders patterns in the last 2 weeks in the S&P 500 and the NASDAQ as well, and they failed and failed miserably. So don't anticipate the pattern. Wait for it to complete. Wait for evidence from the price action to tell you when to buy. This is not a buy by any means. Is it a buy in here? Above 365, maybe we get a little bit of short squeeze rally. But again, guilty till proven innocent. The IWM was down 66 cents, or about another % today. And it's closing in on these lows here from 2006. And in fact, let's take a look. It looks like it actually hit that level. Today's low was 66.29. This low right here was 66.35. So it made a new low today. Lows not seen since, I guess, about November of '05. And this was, if you remember, at the beginning of the year, the group that everyone on CNBC was saying, right, we like small caps for this year. Don't listen to them. Listen to the message of the market. This market was the first one to crack. It's the one that's been in the most severe downtrend, and is potentially the one that's going to lead us back higher again. The semiconductors led us lower as well, so they're starting to stabilize maybe a little bit here. This market is just so deeply oversold that it gets tougher for me to hold any short trades except for very short-term, intraday scalps. And but it continues to be the path of least resistance is lower, and that's where the odds are for continued movement. We were looking for a move down towards 66.50, got that today, and let's see, here's that 66.50 level. So there was a little bit of support in there, but again, there is absolutely nothing bullish about this chart. The market's going to have to get above $69 to have any potential for maybe a little bit bigger rally to unfold. Above 69, maybe we get a rally even up towards that $73, but that's a big level of prior support. So it should be strong resistance there, strong potential for resistance in that area. Again, we've got a declining 10, 20, 50, 100, 200-day moving averages. Nothing bullish here at all. And we have that descending triangle that I had pointed out yesterday that might even indicate a move down towards about $65 a share. So, today we get down to 66.29, so it's definitely within reasonable range to expect that it can get down towards there. And again, it'd be nice to see some more capitulative volume in here. See these volume bars really increasing with the fear, but we're not seeing that, and that raises concern that we're not going to see a tradable bottom here for at least a few sessions until we do get that. The NASDAQ 100, the NASDAQ this week lost about, 3.6%. Today it was down just 0.13%, so not much happening there. But steady volume. But again, we need to see that nice washout volume in here. The lows from August haven't been tested yet in the NASDAQ 100. Maybe a flush out below that level, 44.39. Would be what kind of gets people to panic and throw their stocks away, and then we can look for a tradable bounce. But again, the only upside that I'm looking for in this market will most likely be very short-term lived. It'll be fierce to the upside as short sellers scramble to lock in some of the huge gains that they've gotten this year so far. Sidelines cash come in, and then the dumb money comes in thinking that the bottom's been made, and and it might even actually be a bottom, but you don't know until after the fact. And to go in with all your cash at any one time just doesn't make any sense until we can see signs of stability and see better evidence that this market is ready to turn around. And again, nothing on any of these time frames suggests that we're anywhere near there. So like I said yesterday, there's zero evidence that the buyers are regaining control in here. 46.50, let's just call it 46.80 is going to be really the more important level of short-term resistance for this market to get back above before it can potentially move higher again. There's a lot of damage done to this market, and stocks and markets correct two ways. They correct through price, that's what we're seeing, and then they need time to stabilize and heal the psychology of all the damage that's been done. So we're not going to be out of the woods here for months, I think, so don't be in any hurry to be putting your shopping list together. You've got plenty of chance to buy good stocks at lower prices, most likely, and once they've shown a good, solid level of stability that they can rally from.